I'm Peter Ntefe, Chief Operating Officer with ERHC Energy. Basically, what ERHC is looking at doing now is to balance out that long-term revenue actuating potential of those assets with other assets that will generate revenue in the immediate or shorter term. Therefore, one of the things that we've looked at over the past few months intensively are marginal fields in Nigeria and other parts of West Africa. Using the Nigerian Marginal Fields Program as an example, the marginal fields were set up by the Nigerian government. These were actual discoveries. The oil companies had made discoveries or had even exploited these fields to an extent. But the discoveries or the fields had been exploited up to the point where the major oil companies considered them either not a priority or not sufficiently rewarding at the scale of their operations to continue development. But these are substantial fields, especially for companies who are not within the league of the majors. These are substantial fields. And there are good opportunities for a company that's growing in the business to not only cut its teeth, but to get substantial revenue, substantial experience of the region, and of course make a name for itself. So they're very attractive propositions, and they've been done by many of the governments in West Africa. There are good marginal fields in Gabon, for instance. So when ERHC goes into the marginal fields, it's not as if by virtue of the name, marginal, that these are not attractive propositions. These are actually quite attractive propositions. The thinking is that marginal fields, by their nature, are already discoveries. So it takes a shorter time, a much shorter period, to bring them to production. Unlike assets like the JDZ, that should take longer yet if you make a discovery. So if we could, and we're working very hard at that, acquire substantial interests in some of the Nigerian marginal fields, take those to production, start generating revenue immediately, not only would it do well for working capital, in which case it will diminish the pressure on our cash reserves, it will also look good on the books of the company as far as external investment analysis is concerned. And it will also be a boost to plans which we also have to explore the listing of this company on a more substantial trading platform. And I'll talk about the listing a bit, Dan, because you know it's been a sore point with several people concerned with ERHC as to why it hasn't been done so far.
Yeah.
And all the plans were in place as of last year, and then the markets went belly up. And so at that time, that strategy had to be suspended so that we could watch what financial and capital markets worldwide were doing. In any event, it wasn't as attractive a proposition then as it would have been just a few weeks before the crash happened. Now, there is a general feeling that things have improved to the extent where that can be revisited. And our Vice President, Business and Corporate Development, David Bovell, has been working very hard to see how far we can progress that in the new year. Now, these are two strategies that complement each other. we're getting revenue producing assets, we're getting revenues, shows up on our books. At the same time, we're exploring listing options. You have a better story to tell to the market. You're not telling the market that you're going to be generating revenues down the line. You're saying, look at what we're already doing. Look at what we're building. Look at what we have that's coming down the line. You know, this is a very attractive proposition. So it's all about timing. A lot of people want us to do everything now at the same time, but it's all about timing, especially considering where ERHC has been and has come from. It's all about timing. We have to get the timing right. So it's something that's been really carefully done, and we are positive that we will deliver on some of these strategies, subject of course to some of the things you can't control. There are always external challenges in business. There are always external developments that you can't control. But for the things within our control, we're working very hard to see that we accomplish, we deliver, and we enhance shareholder value.